My name is Tom Kaiser with Franchise Times Magazine, and I'm here with Kevin Burke of Trinity Capital. Kevin is the guy that a lot of people want to hear from here attending our show because he has a unique window into what's happening in the restaurant world. And you're speaking at RFDC about an end to restaurant tailwinds that we've seen in recent years. What are some of the high points that you'd like to cover during that?
I think the concept of a mean reversion, where key components that have been driving profitability will return from what's been some lofty levels to their traditional averages, is going to be a prevailing concept in the next 24 months. And a lot of industry watchers are expecting that.
Well, this past year hasn't exactly been a rosy one for certain corners of the restaurant market. I mean, are you expecting a fairly hard landing here, or do you think it's going to be just kind of a gradual trend down for some corners of the restaurant market?
I think that with the larger concepts having lots of hedging programs and trying to carefully watch acquisitions and procurement, that it'll be more gradual. I don't think we'll have a cataclysmic turn. You know, the one fly in the ointment on that is if the tax bill is not agreed on, if the tax bill goes down in flames, I think that could be hard on the equity markets. But I do think that the cost structure in the restaurant business is got a lot of pressure from labor, from utilities, from insurance, from proteins, dairy, grains, interest rates, and it's very likely that maybe not all, but some of those continue to creep up over the next couple of years.
What about the consumers at these restaurants? You were saying something about that before we got on camera here. It sounds to me like there's not necessarily going to be a big spurring of spending from consumers if this tax bill does go through. What do you see if it does happen?
Well, I think that the tax bill is, by the time it gets through a conference committee and both the House and the Senate get to work it over, it's probably going to have a lot less benefits than it did as initially advertised, first off. Second of all, the middle class hasn't had a pay raise in 10 years. And I think that, it's really a tale of two cities. You've got aspirational class and one percenters that have had terrific tailwinds from low interest rates and inflation and asset prices. Mm-hmm. And you've had the middle class that really has struggled, and they're the brunt of restaurant traffic. So I think the consumer is going to slow down a little bit, and that coupled with a cost structure increases is going to require people to manage a little better and really be prepared for a meaningfully tougher environment.
Well, I want to ask one more question when I've got you here. Restaurant IPOs. There are plenty of examples that haven't really gone as well as hoped for. Yet the stock market is doing exceptionally well at this point. Do you expect to see another wave of restaurant IPOs, or is that really cooled off?
Well, I think with the performance of Noodles and Habit and Steak and Shake and some of the other concepts, Zoe's Kitchen, it's going to be difficult for new IPOs to come along, and those are good concepts with good futures, but I just think that a lot of the lofty expectations on those concepts as they were initially IPO'd has cooled off somewhat, and I think that the aftermarket performance is going to be somewhat of an impediment over new IPOs, at least in the near future.
Could you see any of those brands looking to unwind that and go private? It doesn't sound like any fun.
Well, I think it gets expensive. Number one, and then secondly, I think that once you're public, you've got a platform with which you can raise additional equity if you're performing well. So it's kind of difficult to abandon that. So I wouldn't expect those companies to go private. But I do think that they too will be, facing some of these headwinds as commodities and labor and other costs increase.
Well, Kevin, thank you for sharing this with us. We're grateful to have you here.
Thank you.
Thank you so much.